Hello and welcome to Trading Growth and Value Stocks. My name is James Boyd. We welcome you on this beautiful day in Salt Lake. I think it's over 70 today and probably be cutting the grass by this weekend. So good times are in store. So just hold on if you're still in somewhere in the mountains. Anyway, Brown Buffalo, Scott, aloha back to you. Yes, what island are you on? Oahu, where are you at? Bill in the Fighting Illini country, I should say, Adam X08, and hello to you, and welcome to all. Nirmal, Ocean Life, yeah, welcome. So just real quick as we get started, want to just kind of quickly remind us of our topic, trading growth and value stocks. Now today our focus, I want to kind of really talk about having a stock portfolio that it has bullish examples and bearish examples. Now you might be wondering, well, why would you do that? Well, we're currently in a market where it's kind of more like sideways, at least kind of when you kind of zoom back out a little bit. But there's also some examples of stocks that are maybe winning in terms of fundamentally and technically, but there's for sure some examples of some stocks technically and fundamentally that are eroding. Now, as an educator, we want to make sure that we kind of prepare ourselves for different types of trends. Want to kind of further that discussion here today of why an investor might have some bullish examples and bearish examples. So let's go ahead and hop right in. Now, remember that when we talk about examples, the information I talk about is for general informational purposes only. Should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as the sole means of research. And also remember, when we talk about fundamental analysis, right, we're kind of looking at past data of what the company has done. Also understand that there's macro analysis, which you've been seeing lately regarding, let's say, the economy. If we talk about inner market analysis, how things correlate, like different asset classes, etc. While technical analysis is really interesting, understand that other analysis is also very interesting as well. And we'll bring that up as we go. Remember that also the paper money, will use that's provided for educational purposes only. Also remember that investing in stocks involves risk, including loss of principal. Now, also want to give us a quick reminder that when we talk about, we're going to talk about the market and sectors just quickly, to the first 2 to 3 minutes. Then I'm going to talk about some bull examples or bullish examples, and then I'm going to talk about some bearish example here today. So it's going to be a nice balanced discussion here today as we go through. Now, I also want to be mindful, if you said, James, I've never done a bearish example before, could you kind of slowly walk me through that? I'm going to do that, okay? So I want to talk about kind of having maybe somewhat of a balanced portfolio of bullish and bearish examples. And let's do that. Now, by the way, if you have some questions as we go, feel free to type those in, and we're going to answer as many of those questions as possible. So first off, when I pull up just real quick this chart, let's pull up SPX first, and then we're going to pull up the VIX. Now, the reason why we type in look at the SPX first is a lot of stocks are correlated to the S&P 500. So if the S&P 500 has been going down, probably many stocks that you have in the portfolio, they're correlated to what the S&P 500 does. That's why we look at this. If we just looked at one chart, kind of give us a general idea of where the market is, what do we got? Well, remember I kind of said to you before, if you zoom this chart back out the last 6 months or so, it's been kind of a little bit more neutral. We've had some up move, down move, but really if you kind of went back to where we were in October, kind of right near the middle there, okay? So when we have kind of more sideways range on the index, that gives us some examples of doing some bullish examples and bearish examples. I also want to kind of remind you that in an environment where you might be more neutral on the index, you might decide or make the decision to be a little bit more trader based, okay? Or you might try to do things that are not as sensitive to directional movement and maybe more focusing on time-based examples. If we're talking about stocks, it might be dividend stocks and so on. If you're someone that does derivatives, you might be thinking about time or something like that. Now, if we take a look at the S&P, today we actually saw that there was some news that came out regarding, potential tariffs regarding automobiles, etc. Market took that in stride. Did the market crash down? I don't know. I mean, went down 1%, okay? Did it change the color of the moving averages? Not on the 10 yet, not on the 20 yet. Where was the real breakout level that we actually had here in the gap? It's at 56.75. So nobody likes a red candle at all. I don't think any bull does, but came down here today. Now, as you know with news, okay, you can get news tomorrow that says, oh, by the way, we just have it now. We have a deal with so-and-so. And so the news can, yes, affect what's happening with the chart in the shorter term, okay? And that's just like if we went on the lake and we're affected by wind, okay? So when we talk about investing, we're on the ocean of the market, and the market is exposed to wind, and the news tends to be wind, okay? And it can have effect in the shorter term what happens. Now, if we take a look at just real quick the NASDAQ, what you're now going to notice is same thing. The breakout level there, 19,818. The worst part about the NASDAQ here today was the SOX, okay? The semiconductors. And if you look, and we're going to talk about some examples in the tech space that are under pressure, okay? So semi's under pressure. If we look at, let's say, the VIX itself, you know, we talked about liking to see the moving averages red. And here we actually see that this has been the first time a little bit stronger up movement on the VIX here today. So noted, okay? Now, let's kind of set the expectation. As we said on Thursday, it would not be surprising to see the VIX maybe stay above 16. If we saw the VIX above 16, which means the S&P moves is forecast to move about 1%, maybe the VIX at 20, somewhere in that range, between 16 and 20, it wouldn't be surprising. When we have kind of some of these news headlines that we've actually had regarding the tariffs, you're probably going to see some investors that want some protection. It's understandable for some investors. They might consider that for themselves. So if we kind of said, where does an investor think the VIX might be? Probably in this range, a little bit more elevated than normal, okay, until that somewhat dies down, okay? Now, when we also pull up just real quick these sectors, and I just kind of want to point this out. Gold actually is still above 3,000 an ounce. Second, when we actually see silver, we're still seeing silver over 34. Copper intranight hit a fresh high of 537, okay? And if we look at, let's say, gasoline and crude oil, they've actually been pushing to the upside. And when you look at the energy space, something that we've been watching for days and talking about day after day, crude oil, when we look at the energy sector, okay, crude affecting energy, you're going to see that hit an intraday high on energy. The stock that we've really talked about the most and done a paper trade on is really one of them, is Chevron, and that actually did go up to an intraday high. Baker Hughes was the second one, and that one did not fare as well today. Holding the higher low level that we actually had from before, but paring back down here today so far, okay? So when we talk about the sectors, energy right there, okay, still quite strong. Staples on the back of a little volatility here today, a little push there. And if you also take a look at basic materials, I just want us to kind of keep our eyes open on this one. Basic materials has been going down for a while. Many of you out there might like some maybe divergence. And what we're seeing right there is a little divergence starting to form on the materials. Now, when we say materials, we're talking about some of the precious metals, which we said before, precious metals is like becoming a sector, it seems like. Now, we can include steel there. Fertilizer would be in that space, paper, and so on, okay, base materials. So this kind of just looks like it might be a sector. Keep an eye on this, because if we drew that diagonal line, that would be the first time that we've actually seen that above the diagonal line. And a little, there is some correlation between base materials and energy. If energy can continue to creep to the upside, could base materials go to the upside? Now, this brings out a great point. Not because I'm saying it, because you're thinking it. Who says you had to buy the stock? Nobody says you had to buy the individual stock, okay? Connie talks about ETFs on Monday afternoon, not recorded. Kevin and I talk about ETFs on Monday morning. Maybe the investor says, James, I'm not going to buy individual stocks. I'm maybe going to buy the basket of stocks. So that's something to kind of keep in mind here to consider, Okay. So if you say, hey, stocks right now kind of a little bit more volatile, maybe the investor decides to buy a basket of stocks. Okay. Consider what those risks are. But that's just kind of a thought I want to peg here. Now, do you have any questions? Okay. Now, as I kind of look and see the questions, we would also kind of say, look, keep an eye also on industrials as well. Industrials. Okay. And that's kind of right at that point of, can it break out to the upside? The one thing we would say on the MACD, this is the highest the MACD has been for a while. The last time we actually had the MACD right here, it went for a little run. So if we kind of said, kind of something we're going to keep an eye on, alarm bells go off, basic materials and industrials, okay? Be very careful about overweighting a short-term chart and then thinking that has as much effect as a daily chart does. So notice when we look at these charts, we look at them on a 1-year daily chart, every candle representing a day, and then we could zoom into the last 3 months. But what's happening on the intraday chart does not have as much importance as a daily chart. Now, when I say daily chart, 1-year daily, 3-month daily, and so on. We're talking about overweighting what's happening on the daily charts, not something intraday. Okay, I could pull up a lot of things intraday that don't look that interesting sometimes. Now, what I want to do is, are there any questions that you have? Okay, now Gary says Staples had a good day. You gotta remember something. We've talked about the staples, okay? So when we talk about staples, what's attractive about staples just in general? I'll give you kind of a quick example, okay? Let's say that someone says, look, here's Coca-Cola, okay? Or here's KDP. This is Dr. Pepper. Now, these are not, some people will say comments like, these companies are not that flashy. They don't say flashy, they say sexy, but I'm going to say flashy, okay? In other words, the growth on these companies, they're not NVIDIA. They're not Amazon and so on. Well, sometimes the investor is saying, I don't want something that has high growth forecasts, because if it's doubtful that the company could actually hit those forecasts, they can crash down as much as they crash up. So you have to understand that sometimes in higher pockets of volatility, the staple stocks, these are things that typically people need, okay? Now, if you're someone that drinks Coca-Cola or Pepsi, we love all people here, okay? You're a red or blue person, or you drink maybe Diet Dr. Pepper and so on. These are things that maybe the investor says, hey, look, I want something where there's a high likelihood that the company could meet expectation and maybe also continue to pay the dividends. When you look at Coca-Cola, it looks like it's creating or forming the handle on the cup and handle. Feel free to also look at the 3-year weekly chart. Dr. Pepper is also in there as well. And you're also going to see the MNST, Monster Energy, the beast, okay, unleashing the beast, has been actually on a nice little upside as well. Now, here's the thing. When someone puts all their eggs in one sector, they usually find out why that's not a great idea, okay? So the moral of the story is this portfolio is not going to put all the eggs in one basket. It's not going to put all the eggs in 3 baskets, okay? So when I say baskets, we're talking about spreading kind of some of the, having some sectors, stocks in sectors that have more growth, and then some stocks and sectors that have not as high growth, okay, that might be more dividend paying. Why? It's trying to smooth out some of the potential volatility in the market. When the growth areas do well, the other income, lower growth areas might lag. Vice versa, when the market becomes more volatile and or goes down. If you don't understand that, that's why the returns of that investor tend to be more volatile, okay? Now, if we take a look at this also, I'm going to go back to a couple stocks that I want to point out for just a second, okay? I'm going to go back to the double arches, okay? The little Mickey D. Now, let's kind of talk about this here. So here we are. And let's kind of start with, let's say, a 3-year weekly for just a second. If I were to ask you just a general question, okay, would you say this is an uptrend, sideways trend? How would you say it? Now, this is always interesting for me because you could have 200 people and you could just get all kinds of different answers, okay? If I went back and I just went back to a 3-year chart, what we would kind of say is if we started kind of from where we were 3 years ago to where we are now, if that line is inclined, it's an upward trend. Now, in that time, there were periods where it went up and then went down and so on. But the moral of the story is generally it went up. Okay. Now, if I zoomed in on this and said, okay, what do we have on the weekly chart? The weekly chart is really showing some green on the moving averages, that hue there between the moving average lines. Shorter term, what you're going to notice is there's trying to really be like a shorter term flag. Okay. Now, earnings is upcoming. Now, for many investors, they say, I hate earnings. But for us as traders, sometimes what you can see maybe 3 to 4 weeks prior to the earnings is anticipation of what the earnings is. Anticipation is like Christmas time. I wonder what I'm going to get. I wonder what I'm going to give and so on. Sometimes the anticipation is better than the actual day itself. Okay? Very important that we actually said that. Sometimes the anticipation, okay, that emotion of what can happen is sometimes even better than the day of earnings itself, okay? And a lot of people will trade to that expectation of what they think the company might report. Now, what I'm going to do is I'm going to go back to the 1-year daily chart and zoom in on this. If we kind of said, where do we see most of the resistance? If I drew a line and kind of said, where do we see most of the resistance? It's probably right around, let's say, 311 or so, okay? Now, we could go back and say, this is resistance. No, that's the high, okay? If you said the high is resistance, then a low on the stock chart is support. Oh, okay. When you think about support or resistance, you're thinking about something that's been tested multiple times, not just at one intraday high and or low. This is what we call a potential resistance. We don't know if it's a resistance because it hasn't hit it again, okay? Now, what we're going to do in this trade number one, let's go to the analyze just for a second. Going to go to fundamentals for a moment, okay? Now, what we know is in a market that's kind of more neutral, in the last 6 months in the S&P 500, there's going to be some companies that do better in that environment and some companies that don't, okay? We said it, okay? We said it, and I'm going to show you that. So if we take a look at this, we're going to scroll down and we're going to look at some share values. Now, the comment that came into me was, when you look at fundamentals, you're looking at historical data. And I said back to the person, so when you pull up the price and you look at all these previous candles and so on, is that current data? No, it's historical, okay? When you go back and look at the oscillators and you look at the volume and so on, are we looking at current data or historical? It's historical, okay? So why do people use historical technical analysis, okay? Trend, support, resistance, which support and resistance is historical too, okay? And if you look at volume and so on, it's historical. Fundamental analysis is historical. So it takes kind of with that kind of into consideration that maybe some of the past trends might continue. Now, it's not to say that they're going to, but we're thinking, could we use some of the past history of fundamentals and technicals and kind of think, could those trends continue? Could they? Now, when we look at the per share values, okay, sales, we're talking about revenue. When you look at the sales per share, you're going to see that it's been pretty high, $35.91, which is the highest it's been in, let's say, the last 5 years. We could go to quarterly too. Just want to get a sense of where they are. So when we look at sales per share, that's not really controlling for cost. That's just looking at the sales. When we actually drop down to earnings per share, now we're talking about cost and so on. Now, if you look at the earnings per share, second highest it's really been in the last 5 years. Now, what you're going to notice is investors, okay, were attracted to profitability, okay? Now, if we went to, let's say, quarterly, we clicked on this, you're now going to see what these numbers were. Now, some businesses have some cyclicality to them, okay? Meaning one quarter might be a substantial part of what they have done or are doing for the whole entire year. Here, we don't really see that. We see that the drive-through line of Mickey D tends to be pretty consistent. Okay, we've been waiting to say that all day. Now, what I'm going to do in this case is we're going to come in here and we're going to, now remember, if it's bullish, we're going to do a bullish example. If it's bearish, we're going to do a bearish example. Okay. Now here's the other thing. If we said and agreed that the market is more volatile, nobody ever said we had to do a full position. I said before, and I'll say again, if the market seems more volatile, a half of a position, capital size, can feel like a full position. So we could all think and kind of use our minds and say, geez, if I buy a half position and the market is moving about twice as much as it normally does, a half position might feel like a full position. So what I'm going to do with that thought, which is unbelievable, I'm going to go back to just real quick the trade tab. We're going to type in, now remember, the position size that we've really been working on is 6,500. I'm going to type in Mickey D for just a second, okay? Now what I'm going to do is I'm going to right click right on the ask price. I'm going to go buy custom. I'm going to say with OCO bracket. Now, just right here where the capital size is, we normally click on those pool balls, percent, dollar amount. We were normally doing 6,500. We're going to do 3,250. Okay. Now, we've also been talking about dollar cost averaging, how we're trying to like add only if the position is moving up in our favor, right? Dollar cost averaging, but to the upside. I need help to know where the target is. That's where you come in. I also need to know where the stop is. Now, the other thing is I'm going to click on that right there, and it's going to tell us that this is going to be 10 shares initially. If this starts to move to the upside and we can visually see those higher lows, then what we're going to do is we're going to try to add to the position with the remaining 3,250. Can you type in the chat that you understand that you don't have to invest a full position? You realize that, right? Okay. We're good? I want to make sure, okay? Now, what I'm going to do is I'm going to come back to here, just type in 10 shares. We're not going to do 10.33. And what I'm going to do is, there it is, 10 shares. Now, you got to remember something is, when you're talking about these bigger dollar stocks, they might move $10 in a day, $20 in a day. So when they move around on a bigger dollar amount, a smaller number of shares can still be pretty profitable, unrealized gain, or losses. Now, what I'm going to do is if we go back to the chart for just a second, what about the target? Now, there's some of you, and I'm not saying this is bad, okay? You might be thinking, James, in a more volatile market, I'm doubtful, that investor says. I'm doubtful that we could actually take out that prior high. So therefore, that investor might say, maybe like Bill, I'm going to try to target that prior high. Now, if we put that target there, we're going to type in 326, okay? Now, if you said, James, come on, man up. I know how you feel, okay? If you said man up and let's kind of look and see, now you're trying to call me out here. If you said, hey, overall, James, I'm kind of thinking that flag might sink its teeth here and maybe go to the upside even a little bit more. Well, if we were to kind of measure that and let me duplicate that and let me just add that, and I'm going to go from the bottom, okay? Some of you like to say, James, I like to take the wicks. I'll even be real nice here today. I'll even take the wick for you. Okay? Now, here we go. If we took the measurement, the flagpole measurement, took that to the bottom, added on top, it's going to give us a little bit more, maybe 334. Okay? So if you said one person says 326, someone else says 334, can we not find common ground? Maybe what the investor says, let's just take the middle. Let's put a little target right there at 330, okay? Dated GTC, GTC. Now, what about the downside, right? So the biggest thing is nobody's going to be good at exits if you don't set exits, or you don't have a clear understanding of what those exits could be. If we said, no, I'm going to set the exit, we're just going to go back, and this is a question that happens quite a bit, and we're just going to kind of hit it right here. Well, where would you say that on this chart that there is in the last maybe 2 to 3 weeks some short-term levels of support? Why do we ask that question? Well, because we're saying if this short-term bounce does not hold, where do we see most touches in the last 2 to 3 weeks? Answer. It's probably going to be right around 303 or so. Okay? So if we took 303, okay, 303, and we took less 2%, 0.98, it's going to give us, in this case, what do we got? 303.98. It's going to give us 302 and change. Okay? Now, here's what we got to remember. If we have some investors that are bears and they think the market's going to go down, I know they know this, but let's just make sure not everyone wants to be a bear. Some people don't even have an account to do a bearish position in. You got to think about how many portfolio managers there are out there that might not even be able to do bearish positions for their client accounts. It's called the transfer coefficient. They could have the idea of doing a bearish position, but in that client's IPS, their policy, investor policy statement, it says you cannot go bearish. So even if we said, yes, we see bearish, 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 you got to think about how many people actually really do that. There's probably more of a population that says, I'm looking for more upward trends. Now, there might be less of them from time to time, but and by the way, if there are some stocks that can go up, maybe some investors really kind of follow a couple key stocks. That sometimes happens, okay? Now, what I'm going to do in this case is I'm going to go take 302.02. Now, that's not right. What happened to the calculator? I typed in that wrong. Times 0.98. There it is. 296.94. Okay, 296.94. Okay, there it is. Now I'm going to come back down. Now, you want to know what that loss could be ahead of time. Understand that the stop is not saying that's exactly where we're going to get out. That's the trigger to sell, and it could fill at a lower price. That's the risk. So 296.94. Okay. Now, why do investors, and this is a very important question, okay? Why do investors even have bullish positions on at all during pockets of volatility? Does anybody know the answer to that question? Why do investors have any bullish positions on at all sometimes in pockets of volatility? Well, when the volatility is highest, the reward risk ratios tend to be potentially more favorable for bulls. If you look at statistically, if you went back and said, I invested, the investor says, when the VIX was at the highest levels, okay, the potential returns, okay, tend to be more favorable. Now, that's kind of history. History doesn't necessarily mean future, but that's something that I posted about and shared on X many times over, okay? If I'm going to go confirm and send, what I just stated about the stop is repeated there. We're going to go ahead and say send that order, okay? Now, you're now going to see that right on that chart, we can see where that entry is there. Now, you want to kind of be thinking about what we talked about on Monday. If all of a sudden we get a red candle, we start to get a bounce, etc., the investor might start to say, I'm going to add to the position. So this is the first takeaway here. If you feel like sometimes when the market is more volatile that you just don't like that feeling, no one ever said you had to do a full position. Nothing wrong, and I talked about it before, dollar cost averaging, okay? And try to build a position, okay? Now, what I'm going to also do is let me go back to just real quick a little T-Mobile for just a second. Now, if we look at, let's say, T-Mobile, now I want to go back to just the sector for just a second. And today we were down 4.45%. So therefore, that's bearish. Okay? Is that true? If I went back and let's say looked at this run right here, could we have gone back maybe on a 1 to 5 day basis? Could we have seen some neutral price ranges? Sure. Could we have seen some neutral price ranges here? Sure. Do we see a pullback here? Sure. So we have to be very careful in understanding that upward trends are not just higher highs, higher highs, higher highs, higher highs, higher highs, higher highs on every different blasted time frame. The person that thinks that doesn't understand that sometimes you want that stock to run up and just flatline or pull back slightly. Why? Well, because you want to know that the market is being able to absorb and buyers are willing to actually buy in the consolidation and sellers are not willing to sell in the consolidation. What does that do? It builds a new shelf of support. And then it runs to the upside and pulls back just a little bit. And the investor says it's showing short-term weakness on the short-term chart, but it didn't really pull back that much. So if there were sellers, they didn't really have that much to sell, or they didn't sell enough where bulls stepped in to buy. And that creates the higher lows and so on. So the push to the upside, the pause, those are important. That's what's creating that upward trend. Do not think on an everyday basis that it's just going to pound out brand new highs. Okay? It would be wonderful, but it usually doesn't happen like that. Okay? Now, if we look at communication services, bullish or bearish or neutral, what would you say? What would you say here? Now, if we take a look at communications, it's had a little reversal. Today, kind of dark cloud cover candlestick back to the downside, showing a little weakness. Now, I'm going to show one or two bearish trades here on some stocks that do have bearish type of trends. Now, if I went back to, let's say, one of these stocks, let's go just real quick to T-Mobile for a second. And if I were to look at this chart on T-Mobile, T-Mobile on a 3-year weekly, there was times where it pulled back and it paused, etc. If you were a bear and you had traded those pauses or pullbacks, probably wouldn't have done very well. Okay, trend would have probably ran that investor over per se in terms of making higher highs. If someone was bearish, probably not really saying a whole lot about it, or trying to create a lot of stuff online, perhaps talking the stock down, hoping that you can get back to break even. Maybe it's not the greatest strategy. Maybe the whole idea is to try to ride the general trend and see if it can't continue. Now, if we take a look at this, this is what we see on that weekly chart. The old high, if we take a look at this, is right there, okay? The stock price so far has really come down to that 247, and then we're trying to get a little bounce back to the upside. Now, remember, investors, they're kind of like focusing on not just the chart itself, which is old data, okay, that creates a trend. The numbers of where the price was in the volume creates a trend that we can visually see. We can also see that trend also right on in terms of other fundamental numbers or other numbers in general, right on the analyze. And if we went to, let's say, the fundamentals tab, we can see what we actually have going on here. So if we look at the share values, okay, sales per share, revenue per share. These numbers, again, if you take a look at this, they've actually been kind of marching higher, especially in the last 2 years, okay? Now, you could think of this as if you were the CEO of the company and you had an employee that was making more and more money for your firm, you might say, you know what, I might be willing to pay them more. Now, could you be that guy or girl that says, nah, I'm just going to pay them the same, they're lucky to have a job? Oh, you could, okay? But I don't think you would like that. I think you'd say, no, James, if they bring more value to the firm, let's share with them some profits. Maybe that stock goes up. Now, if you take a look at earnings per share, it's really the highest it's been in 5 years. Now, this is a very valid point. We might say, well, James, how do we know that maybe in the last 5 years, this is maybe the top of where it could go? Now, this is where I'm not allowed to go. I am not an analyst. I cannot say that we can look into the business and see what is in the pipeline. Do they have more that might come in terms of revenue and earnings per share? I mean, we're just not digging that deep, okay? So that's where you have to understand is, do we actually think there's business generally where T-Mobile is just kind of maybe getting that business and maybe outperforming their competitors, such as AT&T and Verizon? Some of you are saying I'm a T-Mobile person, okay? I'm not a T-Mobile person. I'm just saying. Now, if we take a look at this, if we go back to this, the 1 year daily, here we are. So let's kind of do this example. So on many of these charts, some of these are showing kind of more intermediate flags, yeah. They're also kind of showing like maybe some like W patterns, okay? Now, if you take a look at this, what you're now going to notice is kind of getting a little bit above that prior high. Now, let's do this kind of quickly, okay? Because we did it before. Let's say the investor said in this case, look, I'm going to buy the shares of the stock, but a half position. Let's go back to the trade page. What we're going to do is we're going to click on the ask price, okay? Click on that. Now, what we did before, and by the way, let's right click so we could bring up just the buy custom with stop. Does every trade have to have a target? Not necessarily, but we're going to put one. And what I'm going to do in this case is if we said capital size 3250, how many shares is it going to be? That's going to be 12 shares. So once we know that, we can click back on that and just say 12 shares, okay, or 13. If I did that, flip that, put that 12 there, there you go. We're now going to actually look at the target and the stop. Need help again. So now if I actually come back and said, where's the prior high, okay? So if we said, where's the prior high? 272. If you're actually thinking, James, I'm thinking that maybe this has been a pretty good bull flag here, where might that target be? And you got to remember, I might say I'm a bear, but not everyone's a bear. Okay. I think, I mean, is everyone like you? Okay. How many of you are glad that there's not two of me? Okay. Okay. All right. Now, if we take a look at this, now what you're going to could you imagine if there was a twin JB? Okay. Now what you're going to notice is you got 309. Now, if you said, James, in this market environment, I think it's going to be very difficult for some of these stocks to extend. With that understanding, or at least idea, they might say, James, I'm only going to put it at the middle of that. I'm only going to put a target, an extension target of 292. The investor, if they said, I think it's going to be hard to get there, we're going to put 292, okay? And they're trying to have lower price targets that's more probable that it could get there. Now, last but not least, before we look at a bearish example, we're going to set the stop underneath the moving averages. Where are the moving averages? Well, the 257.32, okay, less 2%, and that's going to get us to 252.17. Okay, so 252.17, day to GTC, okay? Now notice this is the second time here today we're kind of doing that, practicing that dollar cost averaging. Starting with a half position, and then if we get that up move in our favor, trying to add to the position, okay? So there's our target price. There's the stop. Remember how the stop works. Confirm and send. And now what you're going to see in this case is we're going to send the order. Great. You're so kind. You're so kind. Now, let's kind of go back to something just real quick I want to show. So historically, we did an example, probably 2-3 weeks ago. We did a position on Nike. And here's the thing. When you look at charts, you want to imagine that you don't have any positions. Why is that? Because what you're going to find is you will taint your technical analysis based upon what you have or what you want it to do. So just newsflash, we have a position. I want to go back to this, okay? And don't worry, that's not going to be the only one we do. But I want to kind of use this as a piggyback on this example. If we looked at this stock and said, hey, what type of trend do we actually have here? We're talking about technical analysis, which is historical price data, okay? Historical. And you looked at this and said, what do we see here? Okay? I don't think if we went back on a year graph and said we started here, there, and we're there, I don't think we'd argue and say there's a downtrend, okay? If we went back the last 1 to 3 months or so and said, what's the type of the trend? Well, about 3 months ago, we started here, and we're down here, okay? So either of those two time frames kind of have some trouble. Now, here's what's kind of funny that I've noticed about bears. A bear, they're funny, okay, in the fact that they'll find a stock that's been down, and then they'll be bullish that stock that's down. And it's like, wait, I thought you're a bear, because aren't you trying to kind of find things that could go down? It's almost like they're just the opposite. If it's up, they think it could fade and go down. Something that's been beaten down, they think it could finally go up, okay? We're not playing that. We're actually kind of going back and trying to ride the trend. Now, the trend technically in that 3-month graph, it's been struggling to say the least. And what you're now going to see is if we look at Nike and kind of take a look at this, they've had some struggle to say the least. When we look at these numbers over here, earnings per share, they haven't been that bad. But check me if we're wrong, there's been kind of like where the sales has been stagnant for about the last 4 years. 356, 373, just kind of flat in terms of earnings per share, okay? Now what I'm going to do on this is I'm going to go back to this and I want to just show an example, okay? Now, in college, I know you had a class on how to short sale, okay? No, you probably didn't, okay? Now, what I'm going to do is we're going to go to the IRA account, which we're on. No, we're not going to do that. But we're going to go to the margin account. Now, why is that important? Well, because we can't short sell a stock in a IRA account, okay? Can't have a negative quantity of shares in an IRA account. But when we go to the margin account, what we can do is going to go back to the trade tab. Now, want to kind of set this up here. Why does an investor maybe, let's imagine the investor says, James, I have 8 bull positions. You got 8 bullish positions. And let's say the market, the SPX, goes down. What do you think the chances are of those 8 stocks all being up when the market goes down? What do you think the chances are? You just saw it. What do you think the chances are? Well, what we've found from kind of looking historically is the harder the market goes down, the greater the statistical likelihood that those bullish positions get pulled down with the market. Okay? Now, what we need to at least understand is, let's say we have 8 bullish positions and we have 2 to 3 bearish positions. Now, here's my question now, okay? You got 2 to 3 bearish positions. If we do 2 to 3 bearish positions and we have 8 bullish positions, does that mean that the portfolio is bearish? That's not true, okay? So let's say that when we look at this, we have 800 shares of stock, 800 shares, 100 shares each, 8 positions. And then let's say we did 3 bearish positions, 100 shares each, and we were negative 300 shares. So what you're now going to see is if we looked at this and said, do we have positive or negative? Well, we would still have we'd have 500 positives still. So kind of the misunderstanding is if we did a bearish or 2 or 3 positions, then that means that it negates all of the bullish positions. That is not true. And if you did 2 or 3 bearish positions, it doesn't mean you're a bear. It means you're trading the trend to the downside. So why does someone do this? Well, because they understand that in kind of a more neutral market, there will probably be less bullish positions, maybe some bearish positions as well. They're acknowledging that and saying, we're probably going to get examples of both, okay? Now, what I want to do in this case is we're going to right-click on the bid. Now, that's different than we've seen before. We're going to go to where it says Sell Custom, and we're going to go with OCO Bracket. So instead of buying the stock first, we're selling the stock, okay? Now, when we do this, now we're only doing this in paper money. This will be a precursor, a stepping stone to what we learn later tomorrow, okay? We're going to sell, but let's say we said, James, I've never done this before. I'm going to sell 50 shares. If you sell the shares, where do you want the stock to go? Well, if you sell the 50 shares and you're trying to buy them back, you'd like to buy them back at a lower price. I mean, think about it. If you sold your house for $500,000 and you're looking to buy another one, you want to buy it higher, you want to buy it lower? You want to buy it lower, okay? Exactly. So when we look at this second row right here, we're going to put a target right here, just real quick. Let's say we said, look, we think the price could fall to 60. Limit dated GTC, okay? Now, what's one of the risks of this type of trade? Well, the risk is that it could go up. If Nike was bought out by Jeff Bezos and Amazon for $75 a share, the stock could gap to the upside and there's no defined risk. That does not negate the learning process here, but we need to understand why some investors choose different strategies for that reason. So on this, what we're going to do is going to go back and say, look, we're going to put a stop right above where that 20-period moving average is. We're going to say, just for quick math, if we get higher than 70, okay, maybe that trend's starting to reverse. And that's what I'm going to do in this case. We're going to say, look, if we start getting above $70, the resistance area, we're going to say buy the shares back. the trend is starting to reverse. Now, I've done this for a couple days now, okay? One of the things you'll see in bearish traders where they really struggle is they never admit where they're wrong, okay? And here we're saying, look, if we go above 70, which is above that 20-period moving average, we're admitting that we could be wrong, okay? And so if it goes above 70, we're saying buy the shares back. The 60 is just where we think that price could fall down to. Now, in the current market, I want you to look at examples. These are not recommendations. Look at the ticker DOW, Dow Chemical, okay? Not recommendation. Look at MRVL, okay? Look at, for example, also with that, a stock example given like NVIDIA, okay? Maybe struggle a little bit. The other stock that I like you to look at for a bearish example is Microsoft, MSFT. I want you to practice 2 bearish trades, short sales, okay? Now, we know the risk to that short sell is, we talked about that, and we're going to further that discussion more tomorrow. I'm out of my time here, but I think as far as an educator, we need to at least understand that sometimes stocks are not just upward trending, they can also be downtrending as well. And so we need to understand both sides of the coin here. Now, I want to say thanks so much for your comments and your participation. Thank you, Connie Hill, for answering those questions in chat. Subscribe on YouTube to the Trader Talks channel, and that way you can also see all of our content as well. Also remember with what we discussed, it was done for example, illustrative purposes only. We'll be back tomorrow, and we'll be kicking off Trader Talks right at 9:30 a.m. Eastern. Have a great day, and this has been the class on trading growth and value stocks. Thanks so much. Take care. Bye-bye.